Good afternoon. This is Dennis Wilson with the Active Trend Traders. Welcome to the Making Money Trading Stocks and ETFs for, what is this? This is Friday, May 11th, the second Friday in May. I want to welcome Michael Bishop, who's with us from Austria, Zurich. No, from Zurich.
Yeah, everything
okay.
right. Wait a second.
Anyway, I guess spring has come to that part of Europe. Yes.
Yeah, it's lovely. So we had this year kind of relatively hard winter with very, very little sunshine. But spring has, so April was a fantastic month, and May is also not too bad.
Excellent. And so, yeah, we well, now that I live back in Hawaii, it's spring all the time. Anyway, but
yeah, but I read you have floods or something like that. Or only one island.
Well, on one island got struck with. I mean, I think experiencing the wrath of God. They have floods on one island. They have earthquakes and volcanoes on the Big Island. So so far nothing on Oahu yet. And so want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of or promise of future performance. So a little bit about who I am, what I do. Active Trend Trading has been in business now since 2007, and so 11 years plus. And one of my favorite quotes, I got this from my mentor a long time ago, and he says, remember, the best trade of the year comes around about every 2 weeks, so be patient. And which is absolutely true, regardless if you are a die-hard swing trader, a die-hard trend trader, which this market has really been challenging due to its choppiness to be able to trade longer-term trends, that a trade will come along, typically, between every 2 to 3 weeks. Sometimes if you're a swing trader, it's more quicker than that. A reminder about what we're doing with active trend trading. We follow the 5 pillars of active trend trading, which is 1, we identify what to trade. Strong growth stocks and premium ETFs. This is a premium ETF, and so this is the case of UCO, which is the oil ETF. And then pillar number 2 is when to enter. And we make our entries based on our back-tested and forward-tested proprietary signals. And in this particular case, we got into a trade and sent out alerts on it on UCO back on 3/19. We entered at $24.71. Third pillar, when to exit based on classical technical analysis. We basically exited twice on this, one up here at 27.59, took a little bit of profits off the table, and then as it drew back and basically hit our trailing stops, we jumped out here with number 2. So we identified pillar number 4, what strategy we're going to use. In this case, we were buying the ETF to build a position, and we're going to be looking some more at oil, because oil has and continues to be kind of strong. The total profit from this trade, and I think we traded about 400 shares, was $1,582 over about a month's period of time. So our expectations with the active trend trading system is a probability of success of about 65%. For our premium members, what we do send out is a text alert to let you know when we are getting into a position. And then secondly, we follow that up with an email that identifies, okay, here's where we're getting in, here's our stop loss, here's our some of the profit targets that we may carry along the way. And as you can see from this, we got out with a 10% profit on the first part of the trade and almost a 20% profit on the second half of the trade. Look forward, those of you who are premium members, to some of the things that we're going to be having, that are going to be coming up with active trend trading, where we're doing better in picking up buys off the trend lines and getting the conditional orders out there so that you way ahead of time can be ready for the trades as they come along. our objective of this session is to, one, see if we have any timely actionable intel to review at the end of the week so that we can be prepared to go into next week and potentially have a couple of either a stock or an ETF that may be setting up for a trade. Do a real quick market review. Today, market somewhat mixed. It is an exceptionally choppy market. In other words, and when you get a choppy market, how do we want to trade it? We want to trade it basically, trade it off the floor or trade it off the ceiling. If it goes up and hits a ceiling price, we want to trade to the downside. If it hits a floor price, we want to trade it back up to the upside. Here's where we're sitting as of about 9 o'clock this morning. All the markets are now up for the year. Dow pushed pushed up where it is slightly up for the year. S&P up 2%. NASDAQ 8.73. NASDAQ Composite and NASDAQ showing this most strength for the year. And the Russell coming in the middle of the pack at 4.5, about a little bit over 4.5%. So let's take a look at what we're seeing in the indexes. Make sure that yep, that's the one. And I'm going to throw on the S&P, and I may go back to the S&P SPX. I may go back to the no, this is good. I'll stay with this for right now. And Michael, very kind of an interesting situation here in that we had a breakout. We had price action move all the way back up. This is a daily chart on the left-hand side, and it rolled all the way up to the top of the Keltner channel. Not surprising. And now it looks to be like it is putting in, if we closed right now, we would have a shooting star, bearish harami on the S&P, which is typically a bearish reversal signal, but it may be just a reversal signal to do one thing, and that's to give us a pullback into the moving averages or back to the bottom of the, or back into the trend line, because oftentimes what will happen is you break a trend, run up a little bit, come back towards the trend and rebound from that, and that would be called kissing the trend line goodbye. But over on the weekly chart, as you see, we've got a nice break of that triangle. And what are some of our targets based on the break of the triangle? We have a couple of them. One is we can go down here, grab the low here, go up to this area here for one of the signals. Make sure I get the proper. We're going to do this a couple of different ways, give us some projections on some highs for the S&P, and you can translate that over to, well, let's see, how many are trading the spiders rather than the S&P? Anybody trading the spiders?
You're asking me?
I mean, well, I'm asking you. I'm asking everybody else online. Are you? Yeah. Do you trade the spiders or do you trade?
I
Go ahead.
I prefer the future.
Okay, you do the futures.
The futures are option on the future.
Okay. Well, the reason I asked that question is basically because I wanted to see which if you trade the SPY, I'll put up the spiders chart, and that way you don't have to translate it from the S&P to back to the spiders. It'll give you pricing that you can jot down, and so make a command decision here. We're going to go over to the spiders, guys. And we can draw basically the same kind of lines in here. It'll take me 2 seconds to do. And as you can see, we've got this high here. Draw in that line. Across there. It's slightly different then, but we'll just lay that on place there. just jump over here and catch that body. And so, okay, so Jim's in a, okay, in a longer term call credit spread or bear call spread on the spiders. We actually sent out 2 alerts this morning to do bear call spreads on both IWM and the Qs. And so a couple of ways. Hey, let's just take a real quick look on how we can determine how far we may go in this move. There's a couple of ways we can do this. Let's jump on first. One of the ones that I like to do is let's take a look at the fibs. The fibs say that we could go from here. Let's do a fib extension. There we go. And so what this tells us is if we maintain symmetry of projection, eventually the SPY should make it back up here for 100% of this symmetry of move to here will put us up to about 275.42. Then add to that, if we went on further, a 168 extension would put us up about the 285, right back towards its old highs. Now, another way to do this on a big triangle like this is just go down here to the lows, go up to the top of the pyramid, which is triangle, which is right there. So that gives us a range. So we can just highlight that, pull that, activate it, bring this over. My gosh darn, there we go, activate that. Bandwidth issues this morning. And then we're going to drop that in where it broke out. They're right about there. That's where it broke out of the triangle. So how far does that take us up? Well, that takes us all the way up to a 2618 retracement. Isn't that interesting? And so up about 302. And if you'll listen to some of the protagonators, they're saying that they're given an upside target on the S&P of about 3,000, and that would be approximately where we're going to, where it potentially go. Is it going to go straight up to there? Heavens no. But that does give us some upside to say, okay, and these fib lines, and taken it the old-fashioned technical analysis way, also projects out to approximately the same place. It always blows my mind on how well one piece of technical analysis science supports the other. So Michael, are you long right now? Or are you going to get long soon?
I'm relatively neutral. So maybe that's the reason why I'm doing pretty well. I have as little stock exposure, I think, as never before, or at least since a long time, because gold, silver, oil, what else? There were really good volatility plays.
Right.
And most of them played really nice.
Okay.
And then I always have FXI, that's a Chinese ETF.
Right.
So that's basically my bullish stance.
Okay.
And the rest is more, as you said, swing trades, or not really something where I have a mid-term bullish stance.
Roger that. Okay, I want to do one last.
Yeah, and currencies I also like.
Yeah, you like, okay. Looking for a strong dollar or a weak dollar?
Well, I would, you see it in the last 2-3 days that the dollar is a little bit overdone.
Right.
So at least for the moment, I am negative on the dollar.
Okay. So here's another projection on the SPYs. This is off a weekly chart, and basically you see the weekly shoots us up where the 786 equals the 100% on the other weekly. So that 275 is an important level for the SPYs. So I'll get rid of that. Remove. And let's go on over to the Qs. Oh, the other thing I wanted to just mention real quick is like on the S&P, we have currently a shooting star, which is a bearish reversal signal on the SPY. TSI has not rolled over yet, but it is getting up into the area where you can anticipate it doing a turnover. So Qs. And Qs, of course, translate over to the NASDAQ. Really interesting looking. I am not going to jump on a short trade simply because, one, it's the weekend. However, I will hedge, and I did hedge this morning with I think I sold the 169 call, and I bought or did the spread. And it's only a dollar-wide spread. And I had at risk like 50 cents, but I did 5 of them. If it comes in for me next week, that puts cash back in my pocket of about $250 for the week. Which, you know what, $250 a week can make a difference in somebody's life. And so, anyway, bearish Rami on a daily basis, and if we get a confirming TSI tick down. I will look to play this more, look to trade this, to the downside even more. But where's my downside projection? Pull back down into the 820 combo or maybe back to the 50. That's as far as I anticipate this going. And then I'll look to be loading up on, going back to the long side. So I hope that that makes sense to you. And so if we throw on, I'll just throw on a real quick fib retracement on this. Just on this last move up, so from this swing low to this swing high, that swing high, where might a 50% or a magic fib box retracement take us? Well, back into these areas, right back into the levels of what would be support because they're breakout levels. So somewhere between 163 to 165, 77, 166 on the Qs. Levels where you can, plan to, and those would reflect, areas where you could, enter with an edge because you would be really close to, you can enter with an edge because your risk reward would be very compelling at those points. IWM is the last one. Again, IWM also showing, this is, what IWM now is in the process. We can get rid of this trend line right here. And it is an ascending triangle. Ascending triangles tend to resolve to the upside. However, anticipate some breakdown and pullback on TSI or on the IWM back into the triangle. And so where might it go? I would anticipate, 158 down to even 160, 156. That's kind of a region where that's where it would make sense for it to pull back. The last time it did one of these pullbacks, and this takes several days to work out, guys, on this last one, when it put up this high here, where did it pull back to? It pulled back, one, directly to the uptrending line, but also into the 38,618 retracement, the magic fib box is what I call that. And if you draw that in there, just and then highlight where the lines are, that can give you a target. Now, if it does the same thing from here to here, well, then it's very simple just to, again, draw in your fibs. And there it is. The fibs, that would be anticipated a return back to 157 to 155, which are areas. And I really like that the 50-day moving average is coming up through that area. And it also puts you right back, and look over on the weekly chart, puts you right back into where it did its breakout. And that would be what would be considered the normal ebbs and flow of this market as it breathes on its way up. So, Michael, you got anything else on the on any of the entities, the indexes?
Well, what I see is that I mean, this year what was really special is that volatility in the US was much higher than the rest of the world, and in the US, the January was strong, whereas in most other countries it was weak. So especially like Germany or Switzerland or Europe, Japan, everything looked quite bearish, and now it changed. So if you look, I don't know, AFA, for instance, that's basically everything except US. EFA, you see it's coming.
Okay, yeah. Yeah, real big fall out of the sky. You know, this looks a lot, EFA looks a lot like the spiders.
Yeah, I agree. So maybe it was, yeah.
Well, the spiders has been kind of the I won't say lagging, but the less energetic of the the indexes, and so that looks kind of interesting. And EFA reflects the economies of everybody except the U.S. Yeah.
Western countries.
Okay, Western countries. So, and I know that they trade on a lot of shares, and there's good openness. I know some people that do trade the options on these, and they like them a lot.
Yeah, it's very liquid and
so one of the things that I'm sitting here.
And Apple, was the star this week.
Apple continues to be a star. I don't personally trade Apple, but since it makes such a big contribution to both the spiders and to the S&P and the Nasdaq, it's one of those where you have to keep it in mind. Now, what's very interesting on Apple is this is an expanding kind of wedge type of formation, a little bit of an upward channel type of formation. It is up where bearish Harami on a daily chart so far, and so to provide some kind of a pullback, way extended from its moving average, as you can see, and whenever that elevation happens, there tends to be a pullback into the mean. Let's see. Okay, I got to run on because we are running out of time. I'm going to throw up a couple of other ones that just keep your eye on. If gold the dollar weakens and gold strengthens, JNUG would be something I'd want to be trading on a pullback down into those moving average, or if it drops that down into past support. Again, I'm getting ready for the upward trade in gold that tends to happen towards the end of the year. Okay, here's where we're sitting as of the end of about 9 o'clock this morning. We're up about 12% for the year, a little bit over 12% for the year. And speaking of gold seasonality, here's the time of year we are in right now, May, June, July. What tends to happen with gold is that even though this is a tendency chart, well, it tends to catch a bid in the June, July time frame, and then from June, July, it basically heads up into the latter part of September, sells off then into the November, December timeframe where you get your push up higher. So those are two, areas of the times of the year to be paying attention to gold. And the chart of gold is really looking, much like it's going to follow through with this. This seasonality has to do with a lot of different things. I was told just a couple of weeks ago that this portion back in the May, June, July timeframe has to do with the Indian wedding calendar, and then of course all the necklaces and all that kind of stuff, the gold rings that are being bought for Christmas or the end of the year holidays. Triggers it in November and pushes it higher from there. So keep an eye on gold. NASDAQ, again, we are in this time of the year. NASDAQ seems to drift higher May, June, July timeframe. Into first part of July, it will tend to catch a bid, but it zigzags. Again, this is a tendency chart. October is when it really takes off to the upside, and then it goes Russell. Russell in May, June, a little bit up to sideways, and then of the three indexes that we follow, it tends to catch a bid in the October, November timeframe, and outperforms through November, December, outperforms the other indexes. So I want to highlight this to you. This is what premium members receive on a weekly basis, which is called our go no go table. And I wanted to set up a couple of things. Here's what we provide to the members, the premium members, to give them, and we're going to be improving this going forward for premium members. Okay, to be a little bit more definitive on how to enter some of these positions. But here, this went out on the 8th. That's when we posted it. I actually wrote it up on the 6th, and I highlighted a couple of them. One, support at the 820 combo. That's the 8 and 20 EMA combo on the daily charts for a long trigger at around $30. Well, what did USO do? Yeah, I'll take this one. What did USO do during that time frame? UCO. And I really love it. Okay, here is what day is that? That is the 8th. And so that was posted and was sent out on Tuesday. And as you can see, highlighted. That was the trigger. And sure enough, on Tuesday, drops down to 30. And so if we would have had an order sitting right there at the 30 level, it would have got, or just in between the 8 and the 20, at, let's say 30 and a half, that would have been filled, and we would have been on, back on our way heading up with UCO. Tesla was the other one that I just wanted to highlight real quick and on what we're doing. What I say in Tesla, okay, 820 combo support at 295, resistance ceiling at 306 to 309. And we talked about, and I basically said, sell the strategy 3 weekly call premium at 307 with a stop loss above 310. Now, we would have gotten stopped out on that trade. However, I just want to highlight to everybody that it would have also got us into the trade just fine. Well, that's exciting. As we see, that was on the 8th. We put that out. It held this 309 level, popped above it slightly, but then, on a retake back through it, pulled all the way back to the 300 level, stayed away from, the 295, which is down here, may retest that again soon. But to trade it to the downside, it would have been excellent. Being ready for that would have been awesome going into the week. So that's what we're trying to provide on this document, the go, no-go table. And so, Michael, I am going to wrap this up. Right now, we're kind of flat on waiting for Netflix, NVDA, Tesla, YY, Grub. Waiting for a strategy. Well, we did just enter some new strategy, two trades today on the on IWM and the Qs, and that's basically about it. So right now, on average, we're generating about 360. This is strategy 2. We're generating on average about $369 a week's worth of income. Taken across, since the beginning of the year. So we'll be working real hard over the next couple of over the next 90 days to get our average up into the $500 to $1,000 per week worth of income. So, Michael, I want to thank you.
You're welcome. Thanks for having me.
We appreciate always
Have a wonderful weekend.
Okay, we sure will. And Charlie, I just got that. Yes, a link did go out. I will send that to you directly also. So, hey, 2018, we're still, 2018 is a breakthrough year for a lot of us and a year of restoration. We'll be seeing some of you on the next final hour, which comes up at noon West Coast time. And so until next Monday, aloha, trade well, and prosper. Remember that there is a webinar, BAM, Bay Area Moneymaker meeting tomorrow. And then on the first Saturday in June, I will be back in the Bay Area. We're going to be joining up with the Silicon Valley Options Group to basically be talking about how to generate weekly and monthly income trading weekly options. So with that, I bid you adieu. God bless everybody. Aloha. Are they online? Yes, you can sign up for and watch that online, Phil. God bless everybody. Aloha. See you, Michael.
Bye.